Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 204, 4 Things Every Investor Should Know Right Now. Matthew, thank you for joining me back on the show. That was a long title, so I couldn't squeeze in Matthew Navickas, but Matthew, thank you for joining me on today's show.
Thanks for having me.
How have you been?
I've been doing well, playing a lot of golf, so that's a lot of fun.
Good. We like that. Summer is here. You know, some golfers complain about the heat, and I don't, for 2 reasons. One, I grew up in Texas, and 2, I'm convinced the golf ball goes further when it's hot. Do you experience that?
If my ball gets in the air, then yes. Sometimes that's a challenge. But yeah, I mean, I agree with you. It can be pretty rough out there, but I tend to embrace it, and I like it.
Yeah, exactly. I'm okay with the heat because, hey, if I'm hitting it 5 more yards, I'll take any yard I can get. So I'm okay with it. I'd much rather play in the heat than the cold. I just feel like the ball doesn't go as far, and so It's frustrating. But thank you for joining me on the show. For our listeners and viewers who don't know Matthew, Matthew is in our research and trading group. Recently passed level 1 of the CFA, the Chartered Financial Analyst exam. So congrats to that. There's only 2 more levels to go. So I know you'll be preparing to study for level 2 here. And you sit right on our trading desk. You've got access to Bloomberg and the markets. You're rebalancing, buying and selling for clients on a daily basis. And so I thought it'd be pertinent to bring you on the show to talk about 4 things every investor should know right now. So Matthew, you being my guest, I'll let you kick off with number 1.
Sounds great. Well, my number 1 thing to know right now is to stay invested. Now, this can be quite challenging, especially seeing the market, take a tumble here, down over probably around 20% at this moment. But staying invested is very important. And I have some information from FactSet that I found. So between January 2002 and January 2022, if you were to stay fully invested between that period in the S&P 500, you would have a return of 9.4%. Now, if you missed the best 10 days in that period, you would only have a return of 5.21%. So that's a dramatic decrease in performance there. And
wait. So let's unwind that a little bit. So you're saying if someone just stayed invested for the last 20 years, they make around, what was it, 9%?
Yeah, around 9.5%.
And then if they miss the 10, literally
10 best days in the market.
Only 10 days.
That's correct.
Their return would almost be half as much on an annual basis.
That's right.
Wow, that is very significant. Go ahead, though. I didn't mean to interrupt you, but I want our viewership to let that drive home a little bit. Is that, literally, so if you just wanted to sit out a week or 2 weeks and you missed 10 of the best days for whatever, over 20 years, you're literally cutting your return in half. And this is why we talk about not trying to time the market, because that is very dangerous. And I'll tell you, doing this for 16 years, if our target return is 9% versus 5%, that is a major impact in somebody's financial plan. I mean, that's so major that they may not be able to retire. They may have to go back to work. They may run out of money. I mean, that's how big of a deal that is. So go ahead, Matthew.
Right. Yeah, it is a big deal. And the reason those 10 days matter so much is because those are the days we're seeing those outsized moves. So, and another interesting fact here is that 7 of those best 10 days occurred within 2 weeks of the 10 worst days. So when these outside moves are happening, they often happen pretty close to each other. So it's like we always talk about it. It's really impossible to time the market. That's why we stay fully invested, to avoid missing the 10 best days.
Right, the rebound. So you're right. So someone, we could have a horrible day. Let's say the market's down 4% in one day. That would be an awful day. Well, if a client calls in and says, hey, I want to sell everything, it's down 4%, I think it's going to get worse. What you're implying is that that's not always the case. And typically we have a rebound, not always, but typically there's a rebound somewhere around this sell-off. So that's a point. It's too late. So if the market's down and you want to sell, it's too late. The time to have done it would have been before then. And again, then you're predicting the future and you're trying to time the market. And that's a very foolish game to play when you're talking about your retirement, your nest egg here, right? Very good. Thank you. So that's a good one. That's a powerful one to lead us off with. I would say for number two, do you have anything else before going to number two?
Nope, I'm ready for number two.
I say for mine, one of my tips or something every investor should know is to not get caught up in the broad market return. So like you mentioned, as of the recording of the show, the S&P 500 is down, plus or minus around 20%. That doesn't necessarily mean that your account is down 20%. And so for all of our clients, as we're reviewing, we are looking at their performance as it relates to the broad market. And typically, again, I can't say this for everybody because I don't want to make a blanket statement, but typically most of our clients are outperforming the broad market, meaning their dip is shallower. Now, this is important because then we want to take your real performance and see how it's impacted your financial plan. So again, my takeaway here is every investor should know, yes, the market's down, but that doesn't necessarily mean your account is down as much as the market. And then more importantly, let's apply that to the financial plan and see how it impacts it. Now, the good news is with our planning, we have markets like this already factored in. So this is not something we weren't expecting. We were expecting this. We don't like it. It's not comfortable. That's not something we necessarily enjoy, but we already factored this in when we were doing our financial planning projections. So don't get caught up in the broad market. Look at your performance as it relates to that, and then go revisit that financial plan. Did I miss anything there, Matthew?
No, I think you're spot on. I mean, in our financial plans, I mean, we have goals of retirement and, buying a house or whatnot. And that's what what the investor should really be focused on, instead of seeing what's on the news, how much the market's down per se. Like focusing on the end goal and knowing, like you said, that we have these factored in. The market's not always going to go up, but as long as we keep our mind on that goal, we have a great chance of meeting our financial goals.
Right. Good. Thank you for that. So what's your third thing that every investor should know right now?
My third thing that every investor should know right now is staying diversified. So as we've seen, it looks like the entire market has sold off, whether that's bonds, stocks. But if you look a little deeper, you can actually see there are some stocks, such as oil stocks, that have actually rallied. So the importance of this is, say a client does need to take a distribution from their account, we have positions within our portfolio that we can actually sell at a gain in this troubled market right now. So that's the big importance, not putting all of our eggs in one basket, really staying diversified across multiple assets, sectors of the market really helps a client weather this storm.
Yeah, really good point there. I mean, I'll do that. So I literally will pull up our clients' accounts and I'll rattle off, hey, these 3 or 4 or 5 stocks are actually up, or you still have a significant gain. So if you do need money, we'll peel from that. And we're certainly trimming that anyways if they don't need money, and maybe buying some stocks that are low. So that's a very good point. So even though, maybe your account's down and it's down less than the market, which is good, but I don't want you to think, like you said, every single investment is down in that account, because that's not necessarily the case. And that's a huge deal, and why we use diversification as part of our investment management thesis. So really good. Yeah. So you got to understand that on a granular level, we can pick and choose. If you need to pull some money out, we can really be strategic about where we pull it from. Good. And then my fourth tip, again, of every investor needs to know this right now, is that if you want to make money, you've got to be willing to stomach the risk. It's called a risk premium. So like you mentioned, the stock market's returned around 9% the last 20 years. If you want that good return, if you want that capital appreciation opportunity, you can't have your cake and eat it too. You've got to be willing to risk it, right? There's virtually nothing that's guaranteed out there. I mean, some of these annuity people will say that, but I don't believe that. Treasury notes are still, I mean, they're backed by the US government, but those could even default. So again, if you want to make money, you've got to be willing to risk it. And history, and again, that's no indicator of future performance, but history tells us that if you do that and you stay disciplined, that in the past, investors that were able to stomach market cycles like this have been rewarded by increased capital appreciation. And so again, if you want to make money, you've got to be able to handle and, to get that risk premium. Do you have any comments on that?
I think this one right here kind of ties into all the ones that we have talked about previously. So taking on that risk, we're taking on risk, but we're also diversified. We're taking on that risk, but we also know what history has showed that if you do take on that risk, you likely will be rewarded. So just having those thoughts in the back of your mind that you're protected, or at least you are, least not as exposed to just one sector, one investment, and that history is on your side. So I think those would bring some peace of mind to investors for sure.
Right. Thank you. And even a retiree. So some people will say, well, Jake, I'm 70 years old or I'm 60 years old. I don't have time for that risk. In many circumstances, hopefully you do. And the idea is with the stocks that we're talking about, we also make sure that you've got your short-term cash flow set up, whether that's in cash or in bonds that pay interest, or in dividend-paying stocks, right? Or even for more sophisticated clients trading options. So again, we want to make sure that short-term cash flow is set up, right? And then what we're really talking about with this risk premium is your long-term money. This is money that we want to grow faster than inflation. This is money that's going to allow you to sustain your lifestyle over a 20, 30, 40-year retirement cycle. This is money that you're going to leave your kids one day. This is money you may never need, but it's for your kids or your grandkids, right? So that's what we're talking about, and staying disciplined. So even again, for some of our older clientele, if they've got a stock component, we're not suggesting they sell, saying, look, you're probably never going to need this money. Let's keep it invested. Let's stay diversified. Let's appreciate that risk premium that, historically speaking, investors that were able to stomach these swings were rewarded by increased returns or bigger returns than inflation. And that's what we're trying to do. Good. We have a bonus one. Did we miss? Is there a 5 bonus one or no? Or we feel like we got it covered with the 4?
I feel like we've got it covered.
So do I.
Yeah.
I think those are 4 powerful tidbits that each and every investor should know right now. And it's very relevant for today's market. Stay disciplined, stay focused. Certainly, if you have any questions, you can reach out to me, Jake at falconwealthadvisors.com. And Matthew, what's the best way for individuals to reach out to you if they have questions on their portfolio?
You can reach out to me at Navickas at falconwealthadvisors.com. You can also give me a call here. I'm happy to speak with anyone. So yeah, please contact me if you would like to speak.
Awesome. Thank you. Now, as we wrap up the show, and again, thank you everyone for tuning in. This is out there on YouTube. If you think it's worthy, give it a thumbs up. If you're listening on your favorite podcast platform, a 5-star rating would be appreciated. Make sure you go over to Falcon Wealth Advisors and subscribe if you're not already subscribed to my weekly email called Upticks. But Matthew, do you have any books, movies, shows, anything you've read, watched, consumed lately that you want to share with our audience? It's kind of always a little fun part of our segment of our show.
So with the the final season of Stranger Things being released, I had never watched it, but all the excitement and all the hype around the show, I finally started watching it. So I'm currently watching the first season of Stranger Things.
Is it good? I haven't watched it either.
I'm not really into all the sci-fi or supernatural things, but I will say it's getting pretty good. So I'm going to continue watching it and see what happens.
Yeah, it is really popular. You're right. I was talking to somebody the other day and I was like, Rachel and I don't like watching scary stuff. And they just laughed at me. I guess it's not scary. I don't know. To me, it looks scary, but it's not something like we're into, kind of thing.
Yeah, I will say I am not a fan of scary things either. So it's not too scary though. Okay, we'll see.
Got it. Good. And I haven't, summer, I feel like we do more. What did we watch? We watched something. Oh shoot, I forgot the name of it. But it's about I think it was on Apple. So it's kind of like a Ted Lasso, believe it or not. So this lady got a divorce and she got a ton of money, like billions, I think. And it's about her story. This is a fiction story, and there's some pretty big actors in it. But it's about her basically changing from like a basically stay-at-home wife to a business person with a philanthropy. I forget the name of it, darn it, but it was a pretty good show. There was 4 episodes out, and Rachel and I rattled through those. So we'll probably watch that as those continue to get released. But I'm reading a really good book called Leadership is Language. I think I talked about it on my last show, but it's been really good. So I'm rattling through that. I've got a bunch of books I want to read right now, so I'm trying to stay focused and get through those. But good. So thank you again for tuning in. I know that's about all the time that we have for today. Really appreciate it. Again, like I said, if anyone is watching or listening to this and you have any questions, don't hesitate to reach out to Matthew or myself. And Matthew, good luck with Stranger Things.
Thank you.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.